Millennials are sometimes termed generation broke, but this is actually a myth. Millennials as a whole are doing pretty well financially. By 2019, households headed by millennials were earning considerably more money than households headed by boomers and Gen Xers at the same age. So if millennials are thriving economically, why can't they afford to buy homes? I'll be digging into this question today, so make sure you stick around until the very end of this video because there's not just one factor that is really driving the lack of home ownership among millennials, but it's a number of different factors combined that make this complex mess. The first reason is affordability. So as a general rule of thumb, your mortgage payment should be no more than 28% of your monthly gross income. So that is your pre-tax income. And this is known as the 28% mortgage rule. And 28% is the threshold because lenders don't want buyers to overextend themselves and then potentially down the line be unable to make their mortgage payments, which could result in foreclosure. So with this in mind, a big reason why millennials aren't homeowners right now is because of the rising cost of homes in America. And let me illustrate that with an example. As of Q1 2023, the median home price in America is $436,800. And the national average interest rate on a 30-year fixed rate loan is currently 7.41%. Let's assume that the buyer has a high credit score of above 740 and is planning to put down a 20% down payment. This would mean that the monthly mortgage would come out to about $2,350. The average millennial under age 34 has an annual salary of $75,000, roughly. And applying the 28% mortgage rule to that, this would mean that a millennial who fits into this category could afford a home of roughly $1,750 of a monthly mortgage payment. This is well below the national average of $2,350. But I will remind you that these numbers are averages, and there are definitely places in America where you can get more for your money, but you would have to be both willing and able to relocate, and sometimes that is just not realistic. Affordability is really only the tip of the iceberg. I think it's probably one of the first things that comes to mind when people think about why millennials can't afford to buy homes, but it's definitely not the only factor or the only barrier to millennials becoming homeowners. I think we can all acknowledge that in the past several decades, the family dynamics have been changing. It seems that gone are the days when people would get married straight out of college or, straight out of high school, very young. Now, more and more people are delaying marriage and getting married later on in life. The average age for marriage for a woman in the United States is currently 27 years old, and for a man, it's 29 years old. And on top of that, the average age of a first-time mom, according to the CDC, is 26 years old. A huge driving factor in the desire to buy a home or the need to buy a home is having a family. And it just makes sense that as you start to have kids that you would want to have more space for your kids to run around, maybe have a yard and and be able to really make personal touches to your home. And that's something that you can't really do while you're renting. But millennials pushing marriage down later and kids down later is really impacting the need or desire to buy a home straight away. And whatever reasons millennials have for doing this, I won't really get into that, but the fact is that it is impacting the push to buy a home or be a homeowner early on. Now, you may be thinking that there are people who are single, they have no kids, they make great money, and they still want to buy a home. And that is true. I personally know of people in that situation, but the fact remains that the majority of millennials are still enjoying the freedom that renting gives them. In fact, a 2018 Pew Research study found that 88% of millennials now live in metropolitan areas. So millennials in general aren't living in the suburbs. They aren't living on a farm in the middle of nowhere. They are opting to live in cities. Millennials are choosing to live in metropolitan areas that have higher percentages of renters compared to homeowners. And this migration of millennials to the cities has actually caused rent prices to increase. As someone who lives in a city myself, I live in Los Angeles, California, I can testify to the fact that millennials enjoy the excitement and the buzz of the city. Being in the city is really incomparable to any other place. And plus, a really big perk of living in the city, just depending on where you work, is that it can save you time and money on commuting, which plays a huge factor into the decision of where to live for many people, and it also plays a role into how you budget your money monthly. Speaking of budgets, the student loan debt crisis is another major barrier to millennials becoming homeowners. As of September 2022, 48 million US borrowers collectively owed more than 1.6 trillion, not billion, trillion in federal student loan debt. And then if you add on private loans, that number increases to 1.7 trillion. The average student loan debt is roughly $37,000 per borrower, and this is only if you're counting the federal student loan debt and not including the private loans as well. So with this hefty of a burden, it's no surprise that home ownership must be placed on the back burner for so many people. And as you have probably heard by now, the Supreme Court recently struck down President Biden's federal student loan debt relief plan, which would have provided up to $20,000 in federal student loan cancellation for roughly 40 million Americans. Now, obviously, this would have been, a huge help to so many borrowers, but this is no longer a viable option for now, and interest is set to start accruing on federal loans in September 2023, and repayment begins in October 2023. If you're watching this video before October 2023, now is a really optimal time to figure out a plan for how you're going to tackle your student loans. I'm planning on creating a student loan masterclass that I will teach live either in August or September of this year, and I will cover how to understand the interest rates on your student loans, how to know when to refinance, and how to create a plan to really attack your student loans and get rid of them as quickly as possible. So if you want to be part of this masterclass, then sign up for my email list in the description box below. And my email list will be the first ones to know about this class, and you'll be able to sign up and get a spot before it completely fills up. While none of us knows the future, I think it's a really good thing to be optimistic about being a homeowner if that's what you want. I know a lot of these reasons are, really bleak, and maybe they're discouraging you if you want to buy a home, but you never know what may happen. Housing prices may drop. You may be able to pay off your loans, and then you'll have extra money to put towards a down payment. You might just get tired of city living or tired of renting. So basically, do not give up if you want to be a homeowner. Start putting a plan into place for how you can save for your down payment, and you can even invest to accumulate enough money to have your down payment. So if you want to learn how to invest in index funds, click the video on this screen right now for a step-by-step tutorial.